Hi guys.
Okay, great. It's Carla Policastro, joined by Joe Policastro, co-founders of Cycle CPA, and today we're interviewing Weston Zimmerman from SynkedUp, kind of a Facebook Live veteran here on our end, in for a second interview. How are you?
And I'm
Doing
back.
great. Thank you for having me on.
Awesome. No, great to have you on again, Weston. We've been hearing great feedback from Synced Up and on our end, and so of course we wanted you back on. So we're going to talk a little bit about Synced Up and what the software does and kind of your um, you know uh, opinion on what's happening within the economy with price increases and stuff like that. But for our listeners that are hearing for the first time, could you give us a little bit of background on yourself and Synced Up?
Yeah, sure. So I spent most of my life out in the field on a landscape company here in central Pennsylvania. Great company, Tussey Landscaping. And I did ran a crew for a number of years there. So I was a user of these software products more so than now a creator of them for most of my life. And it's just now in the last few years that I'm sitting in this seat. So it gives me a great perspective into what's needed in the market and what's needed in the industry. But at Tussey, we also had a great team there. Owners were fantastic. A lot of the team members were there for 10, 15, even 20 plus years. So it speaks to their leadership and just the type of company it was, and also kind of created the perfect storm from which SynkedUp could be created from within. But yeah, while there at Tussey, I ran a crew. I loved building water features. I have the Aquascape Artist of the Year Frog Award thingy there on my bookshelf
Nice.
over here. So that was cool, one of my favorite things in that time of my life. And also did a YouTube channel for Tussey, which now Ben, which is kind of taking my place as a foreman on the crew, is running. So it's not been until the last 6 years. 6 years ago, we started building Synced Up because we felt like nobody was marrying the organizational aspects of software along with the know your numbers aspect, the two, right? And 2 years ago, we went live. A year ago, we really started pushing it in the public market. And today we are on a tear. Here we are almost into April. And the goal that I wrote down on my board here in November that felt like impossible is actually happening. So stick at it and things will happen.
Yeah. No, I think it's fantastic, Weston. And like Colin mentioned, we're hearing a lot of great things about some of our clients that use Synced Up. Even seeing, other people within the community here that, using the product, and I think it's great stuff. One of the great one of the benefits of using Synced Up, right, is being able to see almost like a live job cost,
Right.
right? And um, you know, and the way that it's really pictured and kind of like the ease of being able to just go in and look at it without having to pull different reports and stuff like that. Um, and this is very different, I would imagine, for a lot of the business owners that you're working with here, Weston. Um, have you seen people really utilizing that and being able to kind of pivot even if they're midway through a project?
So it's really tough to pivot in the middle of a project because in that project you've sold the job at a specific price. And if you really did screw up your estimate and you don't realize it until you're halfway through, um, worst case scenario, you at least have the job costing information and you know what went wrong, so you don't repeat the same mistake on the next estimate. To me, that's worst case scenario. Best case scenario, maybe you could convince them to go with some additional lighting or do another change order or whatever that would allow you to recover some of your mistake. But it depends how bad the mistake was when you did sell the job. You know, I kind of I don't very often see a good pathway to pivot within the job other than, and I guess I should define pivot. When I hear you say pivot, I think like, oh, back up and fix the mistake and still make enough money.
Yeah.
Mhm.
That's really tough. But
Mhm.
what you can do is, because you instantly have that information, the feedback loop is instantaneous, it's live. what I see it doing for people that has a genuine impact is it triggers the conversation between whoever the sales guy was, or the owner operator, with the crew, or whoever was out there on the field and with the boots on the ground, and be like, hey, what happened? What was it? Was it an estimating problem? Did we just simply not have enough hours in the bid? Was the client difficult to work for? Was weather just terrible? Were site conditions worse than expected? Whatever, like all kinds of variables. And the important part is that that conversation is happening while you're still on the job or just wrapping it up, not a month later when you finally plug your information in, if you even did it, by the way. For when you finally plug your information in and realize that hey, we didn't make out so hot on that job. And then you go back to the crew, and that was like a month ago, and we've been on a 3-4 jobs since then. It's just like, yeah, you're kind of spinning out. There's not much there. There's not much cause and effect happening. But where the conversation is live, because the progress bar is right on your phone, it enables you to have that conversation, figure out what it is, and very quickly all agree on what we're going to do different next time and not repeat the same mistake, which really is all that I say. This sometimes on the demos I give is like, in plain English, all the job costing is figure out where you went right, where you went wrong, so you don't repeat the same mistake over and over again.
Yeah, that's a good
Very
point.
nice.
I think that in a way, it also keeps employees accountable too.
Oh,
Because
100%.
you're having those conversations. Hey, what went wrong? Why didn't we spend X amount when we said we're going to spend this amount, or when we budgeted these hours? I think employees are more aware of the job cost.
Yeah, and some people, and I guess this depends on the quality of the people on your team, but some people are like, oh, I don't want to show them those hours because then they're going to use all those hours. But I actually think if you focus your energies on good leadership, my experience, I've seen guys look at those hours and like, I'm going to beat them.
Yeah.
Give them something to beat. And then one of the ways you can incentivize that response, instead of like, oh, I'm going to milk the clock until I've used all these hours up, is do a simple little performance bonus. If they come in 10% under, 20% under, whatever, it doesn't have to be much, just something.
Yeah.
And some people actually do make it a significant part of their employees' pay when, that kind of performance bonus. But I think that is one of the ways where you get employees to start thinking a little bit like a business owner, to where like, hey, if I can beat this job, I get this bonus, I get that instantaneous dopamine hit, right? And I get on to the next job and I do it again. And essentially what happens is you become more efficient, more productive, and you might end up being so efficient that you could do another entire job or two within the same season, which really means there's a lot more profit there for you when you can cut out the fluff and just get production done, and having the tools to kind of like gauge and measure, like you were saying, transparency and accountability, I think is huge. I know, at our team, Tyson Landscaping, like people would screenshot that thing and high five. Hey, we wrapped it up. We did great, and it's like a morale booster,
It is.
Yeah.
In human nature, it's to have goals and beat them. Everyone, or almost everybody, has that within their own lives, within their own personal lives, and so having that, like you said, it is a morale booster. So no, I think that's great. And as far as getting set up with SynkedUp, how does that look like, Weston?
Well, our philosophy here at our own team internally in SynkedUp is like, we want to get you through setup and on to actually using the system, aka benefiting from the system as quickly as possible.
Right.
Like, so what we do is we have an onboarding implementation fee, $1,000, but then we do all of the onboarding and implementation for you, done for you. And what that means is we will build a company budget for you. We import your customers, your products, your items. We set up your QuickBooks connections. We set up all your configurations within your SynkedUp account, so that by the time you run through that onboarding call, you're basically ready to be building in your estimates, scheduling your jobs, clocking in, clocking out. Like, because like I think half the time people don't sign up and just start using a system is just the overwhelming feeling of ripping off that Band-Aid and doing something completely that you're unfamiliar with. In fact, I was just at the show there in Hartford last week talking to Jeremy Morales. You probably know that name. Yeah. So he was telling me, he said, I signed up because Ray from Unilock told me I should, but I was still dreading it. And then finally I gave him my information, filled out the form, and got on the onboarding call. I was like, in an hour I was done. Like, this was awesome. This is amazing, you know? And that's exactly what we want. Everybody's experience is different. Bigger businesses sometimes have more information to comb through and get set up. But like, that's exactly the kind of experience we want people to have, is we want to get that set up. You know, remember this about SynkedUp. SynkedUp wants to do the onboarding for you so that you get through to the results as quickly as possible. We don't want you signing up and struggling and set up for the next month or two.
Yeah, that's major, especially for a busy business owner that has so many tasks to juggle. Just having someone to take that over and kind of have a turnkey software solution is amazing. With that, I know that you had mentioned setting up a budget, and so with that comes overhead expenses within the budget.
Yep.
What are some items that people leave out when they're going through that process with you guys?
Well, it can be pretty varied and random, but like common things are, people will think that they don't need to put their own, like owners think they don't need to put their own salary into the overhead because they feel like, oh, the profit's my pay, but it's not. Like it's not. If you're doing that, then your business makes no money, right?
Yeah.
So owner's salary be one, and I would say equipment depreciation is probably one of the biggest ones, and that one's not always done in overhead. Some people, charge as a line item for their equipment, which there's a couple different ways of doing that. But I think as a general rule, people drastically underestimate the cost of equipment depreciation in their business, and they never bake it into their pricing in any way. And the unfortunate part of it is you can operate for quite a while, quite a number of years before that really starts cranking down on you and coming back to bite you. So people can be somewhat oblivious, thinking life is good. And then that depreciation, that equipment starts wearing out, it needs replaced, and you never were charging enough to actually get you the cash you need to replace it.
Yeah. No, that's a good point. I was just having a meeting with a client earlier, and we take the owner's pay because on a profit and loss, owner's pay is usually hiding on the balance sheet, which is not a fun statement for business owners to look at. But what we do is we take that amount and we plug it into the profit and loss because that gives us a better viewpoint of profitability.
Yep.
We plug that in not for accounting purposes, just for our managerial accounting purposes when we go over with the client. And so as soon as we plug that number in there, you get a negative a net loss. And so that tells me that they weren't accounting for their own field work and their overhead tasks as well, because they may do both. And so the owners have to pay themselves a market wage, and a lot of them don't know that. So I think that that's a great point, Weston. And what about kind of accounting for some items that they don't have as an expense just yet, but they're probably going to get there within the year or 2 years, like rent, storage expense, stuff like that? Do you see that often?
Yeah. What people tend to do is maybe look at it from a P&L perspective, which is historical. Yeah. But I like to do budgeting as a forward-looking. Look at it from I'll look at my P&L to kind of get an idea of my history, what the paper trail tells me, but then I'm going to kind of interpret that into projections for where I want to go. And what I mean by that is, like, to your example of like, maybe I don't have an office admin yet in my business, but I want to hire one because I desperately need one and it takes some responsibility off my plate. You should start budgeting that into your budget right now. And I tell people, budget for the company you want to be, not the company you were like yesterday. Meaning, like, if you want to buy that piece of equipment and maybe it's always been your dream to have this sweet new machine, put it in your budget. And then if you can sell jobs based at the price that SynkedUp or spreadsheets even give you after you put it in your budget, then you essentially have permission to go buy that machine because you have generated the funds to go do it. You're selling work at numbers that provide the funds for you to be able to cover that accounting admin in your office, or that new machine you want to buy, or that shop you want to build. You put all those dreams into your budget, and then as long as you can sell work at the numbers that the estimates give you, you have basically permission to go do that.
Yeah, no, I love that kind of shift in mindset where instead of looking at it as an additional expense, looking at it as something that's necessary for your business to grow or operate in a profitable way. And instead of looking at it as an additional expense, look at it as something that needs to be recouped, you know,
Right.
in your estimate. So I
That's
think
very
that's
key.
it's an interesting difference there and kind of thought process, you know, and I think it's super important.
Yeah, it is. Like, because like think about it like this. People will make the statement, oh, I can't afford to go buy that $80,000 machine. The question shouldn't be, can I afford it? It's the question should be, can my customers afford me to do their patio if I own this $80,000 machine? You
Yeah,
know, and as long as I have the confidence and the salesman gift to go out there and sell jobs at those numbers, I mean, I know people that put everything they possibly have on their wish list into their budget, plus then some, and still sell the work. You know,
yeah,
so it comes down to a mentality shift of like, it's not what it costs me, because like I don't pay for their overhead expenses that need recouped. I don't pay for them out of my pocket. My customer pays for them every time they get me to do a job.
yeah, and especially when companies have work on unlimited amounts of work, you know, have a backlog, you know, then you should really think more about this, you know,
Yeah,
and think about, all right, how can I, you know, buy that equipment, you know, and look at it more as, all right, this is going to help me become more efficient now
yeah,
and make higher profits instead
right.
of maybe just working about, thinking about taking on more and more and more work, when maybe that's not being reflected, you know, as much of the profit. So I think that's a great point, Weston. And I'm sure you probably see, because you guys, you know, I think it's something different here than most software companies do. You know, you guys put a lot of emphasis on the numbers, you know, even help them build a budget if they don't have one. Um, so as you go through that process, and then, you know, it carries over into them utilizing SynkedUp in the job costing and through the whole project management cycle. Um, I'm just, do you see that most people are running into issues where it was more of an efficiency problem within their business internally, or was it more just based on pricing? You know, were they just not aware of what they had to price in order to hit the profits?
Um, it can be both, but I would say the more common one is your last one, where they just weren't aware of the true cost of business that they were operating under, and therefore were not charging enough, therefore don't have any profit. And the tricky thing, back to that equipment depreciation thing I was telling you about, it can look as if you're generating a profit because there's money in the bank account,
Yeah,
but then a major equipment breakdown happens. You need you need to, and you decide you want to invest in equipment because you can't hire good employees or whatever. And yeah, it's just so many ways that it can come out, that can come back, and that little nest egg you had in your checking account that you thought was yours to keep, it was profit, suddenly it's like gone.
yeah,
And sometimes even in a negative, causing real cash flow problems.
Yeah, I definitely think that it could be both, a combination, but my thought process is you can only get, like, you can only rely on your employees to be as efficient as they can be. And do you really want to rely on that, or do you just want to price right? Um, if that makes sense. Because sometimes, business owners want to put a lot of emphasis on efficiency, which they should, but it should also be the same kind of goal to price your projects correctly and for the hours that you need.
Yeah. Because in
yeah,
this market that we're living in right now, if you can, you should be able to. I hear people telling me that it doesn't matter what number I give them, they go like they just buy. And like, if you can't build the business that is in your dreams in this market, then that doesn't bode well for when this amazing time will eventually come to an end.
yeah,
Because now is the time when you should be able to invest into your business and cover those expenses and sell those jobs at the prices that you need to cover the cost of operating the business that you want to run.
yeah,
Because the only limit to that thing of like, I'll get whatever I want to build my business and then just sell my jobs at the price that I need to recover those costs. The only limit at that is when you start running into market problems where you literally can't sell the jobs at those prices anymore. And then you're like, well, how can I become more efficient or cut expenses or, to bring that number down? And maybe that means you get more efficient with, insert any
Yeah.
new machine or whatever.
Yeah.
But you know, that's really the only cap to you being able to get whatever you want, machine, tool for your business, then just sell the job at the price you need to cover those expenses. The only cap to that is when the market no longer allows you to sell jobs at those prices.
Right.
And that comes down into your gift as a salesperson. Because like, yeah, some people can sell ice to an Eskimo, and then, and the next of us get all hung up in the mental head trash of like, oh, they'll never go it for that price. You know, I can't tell you how many times. Well, for example, like we onboarded a guy one time, built his budget. Then after we built his budget, I kind of suspected this was going to happen. So I asked him for a recent estimate that he had done. We got one, plugged in all the costs. After I plugged in all the costs, his budget said that he should sell that job at like 15 some thousand dollars. Let's just say $16,000. And he had sold the job at 12,500 or something like that. And my numbers showed me that he made a gross profit, but not a net profit. He was net negative.
Yeah.
You know, and he was looking at the gross profit, thought he was great. But until he factored in all his equipment depreciation, all his costs with his office admin and all that, it was a negative, you know? Absolutely. And so that happens, you know, that's where I use that as an example to talk about. And his response was like, oh, I could never sell it for 16. And it's such a, like, sometimes I believe him, but this was such a small slice, $3,000, that I felt that this was it was like, you know what, whether you can or you can't, whether you think you can or you can't, you're right. It comes down to a mental thing.
Yeah. No. And Weston, I think that if there's one thing about having clear financial reports, clear financial statements, clear job costing, is it should give you the confidence
100%
to go to that customer and say, this is my price.
Yep.
Right. Because ultimately then what's going to happen is, as you build that confidence and you have that clear understanding, then you're going to, in my opinion, right, you're going to get better and better over time at managing overhead, managing your jobs. And then that's how you're going to end up even building more of a competitive advantage for yourself. But at the very least, from the start, you know, you should have the confidence, right? You know, people should be going, and I think that confidence really can go a long way too.
Oh,
right?
It's actually huge. Like I'm glad you brought that up, because like I should have said that along with what I was saying. So, you know, one of the things that SynkedUp does is like you plug in all the labor, material, and equipment, everything you need, and it says, oh, you should charge X. You know, it's based on your budget. So it's based on all these numbers that we're talking about, right? And then this whole head trash thing, you know, you can override that number to whatever you want. So let's say the customer is giving you a hard time, they want to negotiate with you, and they're like, I only have a $20,000 budget, and your bid came out at $22,350 or whatever. So you go in and plug in 20,000. In our app, it will automatically tell you instantaneously tell you what your new net profit number is based on the number you've just overridden it at. And so many times people will come to me. I talk with every customer after they're done onboarding and they're fully using it. And it's like, hey, how are you doing? And so many times people tell me, like, I'm telling you that little thing that every time I'm tempted to lower the price, and then it shows me my net profit, you know, right there, like I can't do it for that. And it's like, it gives me the confidence to stand there, look at the customer in the eye and be like, you know, I understand, I respect you have a budget of 20,000 for a hypothetical example. I can make the patio smaller. I can simplify the design. I can use a cheaper product, but I can't just negotiate I can't just knock it off the top. I can negotiate on the scope, but not on the price.
Exactly. And, you know, Weston, I think a super important thing, and this is what first comes to mind when you mentioned that tick, you know, in landscaping, or even a lot of types of businesses, there's a certain amount of expenses that are literally just flow through expenses, right? That you have to pay no matter what, right? So a customer may not realize, right, because they don't know the numbers of a business maybe, and they may look at a job and say, oh, from 22,000 to 20,000 isn't that big of a difference.
Surely you can do it for 20.
But that's 10%, let's say. If you want to make 15 or 20% on that project, you know, those little changes have an enormous effect on net profit. You know, so, you know, I think that's also one thing, just to kind of use as a business owner to have that confidence, you know, and not to, you know, because just like what you were saying with that one guy who went from what 16,000 to 12,000, there goes his net profit, you know?
Yeah,
So
all of it. And like a
yeah,
lot of people are running razor thin profit margins as it is already. So 10% could be your entire profitability, meaning that
yeah,
you worked for, say, 2 weeks of your life, you sweated and slaved, you paid all your bills, and you come out the other side with nothing.
yeah,
What are you in business for? You know?
exactly.
So, and it's not the customer's fault. Like we're conditioned in our consumer society to be this way. What store don't you walk into and there's a discount tag on everything you look at? There's every online product you buy is like, oh, 50% off if you buy it right now, you know? And so we're conditioned like this, and people don't really understand when you get into construction where there's a lot of capital expenses with equipment, teams, products. Like it's not like you can just go knock 10% off the top and think it's okay and it be okay. That's usually the business owner's livelihood right there.
Yeah.
Most people
Absolutely.
aren't running the luxury of running profit margins of 25, 30, 40% where they have the ability to shave 10% off.
Yeah, no, absolutely. And I feel like we could talk about this all day. You know, but again, and you know, I don't want to beat a dead horse, but it just goes to show, you know, how much of a difference that, you know, if the customer says, oh, you know, instead of, you know, 20,000, can you do it for 16? You know, the incredible difference that that has, but that also becomes the same conversation of, you know, not knowing your numbers in the first place, you know, in another scenario, and not having that knowledge, that even knowing that, you know, decrease in amount is bad, you know. So
Yeah, typically in that scenario, typically what happens is, oh, well, maybe not right now because the market is crazy, but usually it might have been happening like, oh, I only have a month's worth of work left, and yeah, I'll do it, you know, and you
yeah,
cave
yeah,
because, but what changes then is if it's in black and white in front of you, you knock that number down and instance like slaps your hand and says, that's a negative net profit number, you know, it gives you that confidence to just help. Okay, I understand you have the budget, Mr. Customer. Here's how I could help you achieve your budget. If I make the patio 10% smaller,
yeah.
problem
There you
solved.
go.
And then you're
Yeah,
going to find out if they really didn't have the money or if they were just trying to Jew you down, you know?
yeah, yeah. No, and it could be a really, you know, it could be a slippery slope when it comes to the exact scenario like you mentioned, Weston, where, oh, it's the end of the season, maybe, you know, I want to pick up projects to help recoup some of my fixed expenses or whatever, you know. We see that being a slippery slope, you know, and that's not the mindset to really carry forward,
No, you're not going to grow
you
a
know.
business
And
that way.
yeah, so just always put the emphasis, don't you know. And like you said, Weston, you know, customers are going to do what customers do and
Yep.
what they've always done. And, you know, it's your job to be the one to make sure that your company remains profitable. So,
Yeah,
um, you know,
awesome.
I think, you know, Weston, thank you for sharing all these, you know, all this info with us here. Is there anything else you'd like to leave the community here with?
Well, I think like a good way to maybe sum up this whole discussion would be like, don't forget why you came to be in business to begin with. And you probably fill in the blank how you want, but I would say it all boils down to, for most people, so that I can provide the life for my family and my team that I want, that I envision. You know, that's my innermost desire. That for most people, when we go into business, that's what we want to do. And when you're not doing yourself any favors by ignoring the truth or putting off this budgeting conversation or putting off getting a tool like SynkedUp to help you do job costing so the clarity is in front of you. You know, you're not doing yourself any favors because it's just going to threaten your ability to do what we just said, which is provide the life that you dreamed for your family and your team. Nobody wants to pay their employees $10 an hour if they could pay them $20 an hour or $30, you know. So, you know, if you charge the right numbers, you can do what you want to do with your business. And it comes back to your ability as an owner or operator to make sure you have your numbers right in front of you in black and white, know the truth. The truth is usually less scary than the assumption, you know. And
do, the assumption's really, really scary though.
Yeah,
You know,
it is. We fear what we don't know.
Yeah.
And sometimes even if
scary
it's
thing.
really bad, I'd rather just know so that I know what to do about it.
Yeah.
You know,
Yeah. Absolutely.
rip off the Band-Aid, you know.
Yeah.
But yeah, anyway, all that to say, like, don't lose sight of what you started the business for. And that always requires, not usually, it always requires that you, or at least someone in your company, is dialed into those numbers and make sure that you're selling the beautiful work that you do at a price that affords you and your family the life that you want. Don't be a slave to the business.
Fantastic. Thank you, Weston. We really appreciate your time, and you know, thanks for hopping on again.
Absolutely.
Yeah.
It's always a great time.
All right, man.